Mphasis. That's the one which has started off gap down. The market's punishing the stock for the poor quarterly numbers that the company has posted. The management just about gearing up. Let's cut across.
Our revenue grew sequentially 5.2% before hedge, and after hedge it grew 4.1% sequentially, so that was pretty good result. What is heartening to see is our direct business growth and the traction that we are getting in the market. In direct business, we grew 14.4% on rupee basis sequentially and 8.8% on dollar basis, so which was pretty good. Let me give you a bit more color to the direct business growth. In the mature market, we grew 10% sequentially, and emerging was a stellar performance for us. We grew 28% in the direct space for emerging market. A couple of other points that I want to share with you. Our focus has been on profitability. Happy to share with you that our EBITDA improved by 60 basis points over previous quarter, and we came in at 18.5% in EBITDA terms. Our operating margin improved by 30 basis points, and we came in at 15%. We added 28 clients, 17 in the direct space, and our cash position improved by $33 million, and as of now we are with $391 million of cash. And our focus has been towards hyper-specialization, looking at newer business models, and I'm very happy to share that we have got a win with Jetstar to provide accounts payable platform-based BPO services. This is where we bring the best of our applications and BPO together, and thrilled to have such a marquee client in our base. And we'll be sharing the details with the media later on what kind of project we are doing. So this is another proof point of how we are moving towards verticalization and specialization. Back to you for your questions.
So your numbers came reports on your share buyback which have happened over the course of the past couple of months. Can you give us clarity on what it is?
I was asked a question by the media that what is your position on share buyback? And I shared with them that every quarter we look at our cash strategy, good usage of cash. Obviously our cash right now stands at $391 million, and we have few options. One of the option is inorganic, the other is share buyback. In this board meeting there was no decision made as far as share buyback is concerned. We are actively pursuing potential opportunities for acquisition.
So your numbers came below the consensus estimates. We understand that it's a seasonally weak quarter. There was also a shutdown at HP, but it looks like your final numbers were still, still didn't match up to what analysts were expecting. So are there certain areas which are, a matter of concern, and is this likely to continue in the coming quarters?
So, I'll also ask Ganesh Murthy to chip in. Let me give you some of the things which probably we need to bring to the attention of everybody, including our investors. We have a long-term hedging policy. One of the reasons why people were expecting better results has got to do with the fact that they were expecting with rupee depreciation we will benefit tremendously. But when you have long-term hedging policy, whether rupee depreciates or appreciates, you don't have significant impact on your numbers. So that is how we operate, because we believe that we should be delivering results based on operations rather than the swings of currency, and hence that is one of the reasons. Obviously, if I look at our growth rates, we are very, very happy with our direct business growth. But on the other hand, our area that we need to work on is the area of our business with HP Enterprise Services, because in this quarter we had a sequential decline on at least, if you look at it on a dollar basis, about 4%, and that is an area which we have to address.
You were talking going to have a new CEO who took charge 3-4 months back. A better clarity now on what the strategy is going to be as far as HP is concerned, their outsourcing strategy. What signals are you getting from the new management?
So, as far as we are concerned, they are our customer, and we need to bring the value. And as far as enterprise services is concerned, we have been in discussion to explore newer models working with them, because at this point of time, the traction which we are, if you look at our results, obviously the business has been declining, and we need to find a new way. So it's not about what is the CEO's strategy for HP, it is what is about this CEO's strategy for from Mphasis standpoint to our customer, together with my team. And that's what we are working on. Stay tuned, let's see whether we are able to crack the code with newer options which we are putting in front of them.
Going back to earlier question, you're saying that you're actively pursuing Any comments you can offer us, what details, how soon do we expect to close, or what areas are really interesting to you? How much office 391 million would you be willing to spend on that?
So you see, the constraint is not 391 million. The constraint is whether it is the right asset for us. And we keep focusing on what is the type of asset, whether it takes us up the value chain, whether we can integrate this company. And $391 million is not a constraint. So we are open to a larger acquisition or smaller acquisition. But if you look at the history, very large acquisitions tend to be a bit more risky. And we want to do the right thing for our shareholders. Our focus is enhancing our value proposition to our customers, moving up the value chain, going towards hyper-specialization. Couple of areas that we are very, very interested in is assets in the banking capital market, assets that help us to have platform-based BPO, assets that provide analytics service, and it need not be in banking capital market because these are the assets which you could leverage further. So that's our focus, and we are actively pursuing. Regarding the time frame, these kind of predictions are very hard because until you have signed, anything can go wrong. So I wouldn't make a prediction in terms of time frame. We are very, very active in this field at this point. Okay.